Is UPS any better than FedEx? Let's talk about that. Hey guys, in this video we'll be screening UPS through our three metrics to see whether the stock is trading at overvalued, fair, or discounted prices. From there we should determine if the stock is a buy or not at the current prices. These metrics could also give us the best entry prices for the stock. We'll also be looking into their charts to check some key levels and our entry prices. UPS is currently trading at 214.46 with high price of 233.72, current market cap of 186.82 billion, and PE ratio of 14.61. They give out an annual dividend of $6.08 per share, a yield of 2.84% of the current price. First metric, we want an EPS multiple lower than 3. It's 1. I like high EPS stocks, but if you look closely, this is an anomaly right here, 14.68. But this is the kind of anomaly I want them to continue. They had a rough 2020 as well, like FedEx, that they had to resort to issuing back shares, which basically offsets everything. Dividend is safe at only 41% of their current earnings, but look at this. This is if we're using the current EPS of 14.68. But what if we use the normal EPS of 5? Their payout will be over 100. Guys, what I want you to look at is their debt levels, because I bet it's ballooning. I don't know how they pay dividends. Second metric, we want to pay $1 or less for 1% of the money they're making. Meaning, we want to pay 1 PE or less for 1% of their margins. This is based on the lowest margin between the net income and the free cash flow margins of the current year and the averages of 5 and 10 years. What you see here is the revenues deconstructed, the costs and expenses the company uses to make these revenues. The net income here is after taxes and free cash flow they generate off of those revenues. From this revenue growth, I see single digits, so I won't be paying premium for the stock. Of the 4 highlighted values, I use 6.97 to divide the current PE because it made the most sense. As you can see from their historical data, they had an anomaly in 2017 and that cost 4.69, so I won't be using that one. I also assumed the same PE I used with FedEx to UPS, 456. Look at this 2021, 13%, 11%. I mean, this is good. But can UPS do the same thing for the next years? Because this margin are actually very good for the company. And like I told you before, these companies can cut expenses and costs to make most of their revenues. UPS is currently trading at a premium now at 2.1 times their margins. Meaning, if we buy UPS at this price, we'd be paying 2.1 times their margins, which is, for me, I don't like paying $2 for $1. Historical data suggests that the stock is trading at a lower PE now compared before. Although we can see here that UPS has always been trading at PEs higher than their margins, meaning you have been buying the stock at a premium, well, at least according to my metrics. In conclusion, UPS is overvalued as it trades at 2.1 times their margins. I don't own the stock. I won't be paying premium for the stock. I'm not a buyer of the stock at the current price. My fair value of the stock is 102. Intrinsic value of 62.25. This is from Guru Focus. Here are my entry PEs, 456. I'll always buy the stock at 456 unless, the margins change. And here are the equivalent prices of those PEs. I have a high price of $88. For the sake of mapping where UPS is trading, I have here my multiples. 1.25 for 10% growth in EPS, 1.5 for 20%, and 1.75 for 30%. Even with this, I have a high price of 155. So it's still overvalued, guys. And now for the tough question. Is UPS any better than FDX? Well, they're both overvalued by my metrics, but I would say yes. UPS is better only because UPS is a positive cash flow company, unlike FedEx. Although, both stocks have ballooning debt levels, so I think I'm gonna pass on both. This is a low profit margin company, guys, so it should trade at a lower PE. By charts, $100, my fair value, is COVID levels. This rise, I'd say, is an anomaly. I wouldn't buy and chase this at these prices, so you might want that 120 to fill and maybe reassess from there. This three metric I use is designed to determine the best PE to buy a particular stock, as I believe PE is the price you pay for in a company. This is my process of screening stocks to buy at what PE by looking purely at the company's financials and none of their fundamentals. If you like to invest in these companies, I'd advise you to look at their fundamentals, their charts, and more of their financial data and metrics like long-term debt, some important financial ratio, etc. As always, do your own research.